problems do you think property investors could be facing in 2018, Rory?
Right, so let's look at one or two key things here. We talked very briefly about the 18-year cycle. So if we're 14 years up, 4 years down, we're at the top of that 8-year period. So we might just see a bit of a slowdown in the market. And for some people, but that slowdown isn't great. Generally, the drop has historically been about 1.5% to 2%. So it's just a temporary blip, and you can't always identify it. So that's one risk. You need to know your market. So for example, if you were buying in London, would now be the right time to buy in London? There may be better opportunities in the northeast or the northwest, for example, or maybe the Midlands. And then you start to break down into, so let's just look at HMOs, houses of multiple occupancy. Generally, you'll have regular council tax, but we have heard from some investors where the VOA, so the Valuation Office Agency, they are imposing council tax on a band-aid basis per room. Now that could have a massive impact if you had to pay £100 per room as opposed to £200 or £300, and how would you deal with that?
Absolutely.
And so some of the workarounds would be, well, technically if you're banded separately, the tenant can get a 20 to 25% single person discount. They are liable, but because it's not a universal banding, they'd move to another landlord's property. So I see that as being quite a big risk.
I agree, and I think that you keep abreast of the news and conversation on the property forums, you can see this is happening more and more, and people are coming to say, this has happened with me now in this area, this has happened with me now, and I think, like you say, this is a real danger. This can spread, and it probably will do, and they see how they can make a lot more money out of it.
I think so. I did read this, I've not validated, but I had read that when you turn a 5 or 6 bed HMO into 5 separate bandings or 6 separate bandings, the local authority gets credits for building new homes. Now, I don't know if that's true. We need to do more research, but that would explain why
it really would
this
explain.
is happening. Also, I think there is a greater risk if you're buying a commercial property, converting commercial property into residential, because the VOA have to come and reband as part of the process. And that may be an opportunity. So that's something to be aware of. The other big issue is our dear friend George Osborne. Thanks for nothing really, George. You impose this crazy tax on landlord where you're basically taxed on turnover. There's no other business I know anywhere else in the world where you're taxed on turnover. So what does that mean as a risk? And I think there are some savvy landlords now who are seriously thinking maybe of offloading some stock. And I think as we go through this process over the next 4 years, halfway through, I think we'll start to see some landlords, if they're not making money and they're quite highly geared and they're not able to claim their mortgage interest rate relief because they're higher rate taxpayers, that could be an impact. The last risk that I see would be, again, which the rules that came in this year related to portfolio landlords. So if you own 4 or more properties, the lenders will have to stress test your entire portfolio before they'll lend you more money. That's a much tougher job for the broker, and it might mean that you as an investor, you go and buy, let's say it's your 5th property, you think you can get a 70 or 75% loan to value. Well, actually it'll be dictated by the lender based on the stress testing on your portfolio with other lenders. They will tell you what you can get. So what does that mean? You may have to put more money into the deal. And I only focus on one number, and that's return on cash. So I don't look at yield, I just look at if I've left X amount of money in the project. So let's just make some numbers up. If I've left £100,000 in a project, can I get a 10% return on my money per annum? Why? If I can get a consistent 10% return is quite tough, but if I can get it, then it's a good deal. If it's significantly less than that, do I want to take the risk? And I'm ignoring capital growth because we never bank on that. So those are the key risks as I see next year.
Thank you.